Hey YouTube family, Mike Jones here, back with another video on my channel where we talk about all things investing in personal finance with the genuine hope that we will be able to go ahead and inspire someone to start their financial journey today. With that said, we're going to go ahead and be getting into my Webull portfolio, which is our weekly update every Friday after the market closes, which is about 5 p.m. Pacific time. With that said, let's go ahead and get into it right after this. Right. Hey YouTube fam, welcome back to my channel. So like I said, we're gonna go ahead and be getting right into my Webull portfolio, and we're gonna go ahead and start screen recording right now. All right, that's our market watch, which is our watch list. And we're gonna go ahead and look at our portfolio for the day. And we are doing absolutely awesome, guys. So as you can see, our net value for the account today is $10,846.32 with a gain of $1,388.98. And up about 14.68%. With that said, let's see what happened over the week. And as you can see, let's see if we can do it here. As you can see, on Monday, we were at $10,642.39. On Tuesday, we were at $10,460.33. On Wednesday, we were at $11,027.46. Unfortunately, we did not stay there, but there's always next week. Then we went down to $10,743.64. And as we talked about, we are at $10,846.32. So let's go ahead and see what exactly went on with my portfolio over the week, what gained and what lost. All right, so let's go ahead and see what we bought, and let's go ahead and see what exactly happened. As you can see, the first stock we have is Tesla, which is our biggest gainer in this portfolio. We are up $1,270.25, which is about a 95% return on Tesla. Absolutely phenomenal. As you can see, we bought 6 shares at an average price of $222.76. Now we had, as you can see down here, we had a share that we bought on June 3rd of 2020 for $892.31. And then on the day of the split, which split Tesla shares in 5 to 1, we went ahead and bought one more share at $444.26. So we are only $10 away from going back to that split price that we had post-split, which is absolutely phenomenal. This position takes up about 24% of my portfolio, which is pretty high. We're gonna go ahead and alter that in the near future, but for now, we're okay with that. The next company we have, as usual, is Snapchat, which is ticker symbol SNAP or SNAP. We have 5 shares that we got at an average price of $8.37. And as you can see, the market value is $134.50. So we have an unrealized profit of $92.65, or about 220% gain since we've had the company. And as you can see down here, we never bought this company. These were 5 free stocks we got for the referral. So if you want to go ahead and open up a Webull account, I do have a link down below. Go ahead and open it up. You will receive 2 free stocks. I will receive 2 free stocks, and then everybody will be happy. Now, for you to get those 2 free stocks, you do have to put a deposit of $100 into the account. But if you're gonna be investing, you're gonna be doing that anyways. So go ahead and get started if you like. but this makes up a 1% of our position in our portfolio. Next company we have is Lam Research, which is a company that I absolutely love as a Bay Area representative. We bought this company at a price of $271.33 on May 28th of this year. And since that time, we have gained $91.68 for a positive 33 or 34% return. And this makes up 3% of our portfolio. Next company we have is Deere, ticker symbol DE. And this is John Deere that we're talking about. And we bought this company one share for $157.79. And we bought this on June 3rd. And since that time, we have gained $77.04, or about 48% return since we bought the company. And it makes up 2% of our portfolio. Next, we have WW Grainger, which I've previously talked about in videos. And we bought this company at $328.85 and on June 9th of 2020. And we are up $56.57, or about a positive 17% return. And it makes up about 3.5% of our portfolio. Moving on, we have Viacom CBS, which was another company that I didn't have to buy. They were free shares on a referral. And this is just another solid pickup. Shout out to Webull for that, and shout out to the person who helped me get the referral. So we have 2 shares at an average price of $12.77, and we have gained $32.42 since having the company, or about $126 or 127% return, and it makes up about 0.5% of our portfolio. Obviously, moving forward, we'll be buying Viacom CBS ourselves because we do believe in the company and we like what they stand for. The next company we're going to go ahead and talk about is DraftKings, and this is a company I bought on my own. I truly believe in this company. I have said that I believe they will get to $100 a share, but I have 2 shares right now, and I bought 1 share at a price of $29.40 on May 19th of 2020, and I bought another share at $36.88 on May 28th, so 9 days later. And I bought them both at an average price of $33.14 for a unrealized profit of about $31, or 46% gained in this stock. And we are at almost a 1% position in this stock. Moving forward, we have Berkshire Hathaway, the Class B share. And we bought this stock at $185.88, and that was on May 28th of 2020, and we are at an unrealized profit of $29.92 with 16% return, and this takes up about 2% of our portfolio in this account. And next we have Starbucks, which is a company I truly believe in. Starbucks is going to do its thing and get to about $125 a share. I just haven't prioritized buying more shares right now. But as you can see, we have 1 share at an average price of $65.70, which we bought on March 13th of 2020, which means it was like 3 days before the shutdown, and it's done nothing but do well for us since then. We have gained about $24.53 of unrealized profit, or about a 37% return. And this almost makes 1% of our portfolio because of the growth that we've gotten from it. The next company we're talking about is Eaton Corporation. And as you can see, we bought 1 share at $88.29 on June 3rd. And we have gained $19.07, or a positive gain of about 21% return in this company, and it makes up about 1% of our portfolio. The next company we're talking about is Amgen, which is another company I've talked about and I really love. We bought 1 share at $225.57, and that was on May 28th of 2020. And we have an unrealized profit of $11.53, or about a 5% return. And it takes up about 2% of our portfolio. So the next company we're talking about is Kimberly-Clark. And you know how much I love Kimberly-Clark if you've watched my portfolio videos. I just haven't been able to buy more shares of it so far. But we bought our share at $141.05. And we bought that on May 28th as well. And in that time, we have gained $11.44, or an 8% return. And it makes up about 1.5% of our portfolio. Clorox is another company that I'm absolutely bullish on, and we bought them at $203.81 on May 28th as well. As you can see, we have gained an unrealized profit of $10.49 with a positive 5% return, and it makes up about 2% of our portfolio. Moving on, we have Hershey, which is the only chocolate stock that I am investing in. And I truly believe, actually, that's not true. I have a second chocolate stock that I'm investing in, but this is the main one that I'm investing in. But as you can see, I only have one share, which I bought at $135.37 on May 28th as well. May 28th seems like it was just a good day to buy good, solid companies for me. But we are up $10.26 in this company, or about 7.5%. And this makes up over 1% of our portfolio. Moving on, we have Workhorse Group, which is an electric vehicle stock that I am very, very bullish on. If you want to know a little bit about them, they go ahead and specialize in delivery vehicles of the electric vehicle type. And so I see this company extremely booming over the next couple of years. And so I went ahead and bought one share, but trust me, I will be buying a lot more shares of this company. And I bought at an average price of $17.93 and on August 31st of this year. And I am up $10.25 in that time, or about 57.17%. Now that is the 1 week side of my portfolio so far, is that most companies I have not went ahead and bought a whole bunch of the shares because I'm still a cautious investor, even though I'm super aggressive. But moving forward, I think if I believe in a company and my instincts are telling me go ahead and buy this company after I've done the research and looked at the data, I think I'll go ahead and buy multiple shares of a company, just so these profits could be 10, 20 times what they are. Because I could have made $200 by buying 20 stocks off this company, still at a 57% clip. But these are lessons we are learning. This is a journey. This is not a sprint. This is a marathon. So we are totally okay with learning as we go. With that said, make sure you go ahead and hit that like button if you've enjoyed this video so far. Make sure you go ahead and comment down below which stock was most appealing to you and that you're probably going to go ahead and get on. And make sure, if you are not subscribed, go ahead and hit that subscribe button. We have about 70% of viewers that are not watching or that are not subscribed to the channel. Come on, guys. Let's grow this channel and let's get it to 1,000 subscribers by my birthday. That would be really awesome. But with that said, let's go ahead and keep on looking at the stocks. So the next one we have up is BMO, which is a Canadian bank that you know how I feel about Canadian banks if you watch my channel. But anyways, I'm super bullish on Canadian banks. And so I have one share at an average cost of $54.50. And I bought this on June 3rd of 2020. And I have an unrealized profit of $7.81, or about 14.33% gains. And so that's half a percentage in my portfolio. The next company I'm gonna go ahead and talk about was another free stock that I got. So shout out to Webull, shout out to the people that got referred and used my referral link. If you want to go ahead and use that, it is down in the description. But we have two shares at an average price of $10.13. which gives us an unrealized profit of about $5.24, or about 25 to 26% gains in this company. The next company we have is Fastenal, and if I don't know if you heard my story about Fastenal, but there's another company called Fastly, and I was planning on investing in both of them, and I didn't invest in Fastly. I only got to invest in Fastenal, and it cost me because Fastenal or Fastly has gained like $70 to $80, so it's basically 200. It's 2x since the time that I saw it, because they were both at the same price. And I went ahead and bought this one, and as you can see, we're gonna be grateful. We're gonna talk about the fact that we bought this at $42.82 on June 9th of 2020, and we have an unrealized gain of $4.21 for about a 10% return, which is absolutely awesome. But we could have 2x'd the other stock that we were looking at. So this is why it's so important to go ahead and get started today. Because you don't want to miss out on these gains, and you're always going to miss out on some gains as an investor. But you know, if you don't get started today, if you delay, if you procrastinate, then you just have to, you know, go back and go even more. So definitely think about getting started today if you haven't. The next company we're going to go ahead and talk about is Duke Energy, and as you can see, we have one share that we bought at $88.73. and that was on June 3rd as well. We are up $4.13, and that is an average return of about 4.65%, and it makes up almost 1% of our portfolio. Super solid energy company, by the way, if you want to go ahead and look at them. The next company we're talking about is Halliburton, and as you can see, we have two shares that we bought at different times. The first share we bought for $10.01 on May 7th, and the second share we bought at $11.15 on May 19th. And we have gained, from those two shares, we have gained $4.02, or about a 19% return. So we're really happy with that. Next company we're going ahead and talking about is Goldman Sachs, and we have one share at an cost of $204.26, and we bought this on May 28th as well, and we have gained $3.73, or about a 1.83% return, and it makes up about 2% of our portfolio. And you may be saying $3.73 for a company you paid over $200 for. We're not so much worried about the gains, although we love the gains. This company also gives a solid dividend, and it just has everything we're looking for in a financial institution. So that's why we bought this company. We're not worried that, you know, in the couple of months that we've had the company, it hasn't really performed from a growth standard. We know that that will come eventually, and because we are buy and hold investors, we are willing to wait for that. Now I'm gonna go ahead and get into some of the losses, because we do need to talk about that as well. Like I said, full transparency, we're gonna acknowledge everything in our investing journey and our financial journey. So if we make a mistake, we're gonna talk about it just as much as we would talk about, you know, the successes we had. So the first company we're starting right off the bat with is, you know, GE, which, as you know, if you've watched any video on my channel, is the one company that I'm still waiting to go ahead and rebound. It was the very first company that I bought in my respective brokerages. I bought almost 150 shares between each brokerage, 100 in this brokerage and 42 in my other brokerage. And as you can see, we bought 100 shares of GE at an average price of $9.89. And as you can see, during the time that we've had it, which is since the beginning of February 28th, in that time, with the economic crisis and the pandemic, we have lost $301.41 on this stock, or about 30.46%. And it makes up about 6% of my portfolio, which is why my portfolio is not doing as well as it could be doing. But we have still made $1,300 with this $300 loss, I should say unrealized loss, on our portfolio. So with that all accounted for, we really aren't doing that bad. But we'll go ahead and look at some more of the losses. As you can see, the next company I'm talking about is one of my absolute favorites, and that is Bank of Nova Scotia, ticker symbol BNS. And this is probably my favorite Canadian bank out of all the ones that they have. So we went ahead and bought 9 shares at an average price of $51.92 on March 5th of this year. And then a couple days later, literally a week later, we said, oh wow, it's down $10. At the time, $10 would have been about a $90 loss from, actually it's over $11. So it would have been about a $100 loss from the 9 stocks that we already had. A $100 loss, and we saw that and we said, let's buy more. So we bought 11 more shares at an average cost of $40.36 on March 13th. And that is what is called the art of dollar cost averaging. We are buying at the dip because we want to get the average down for the number of shares that we have. So that's what we did there. And our market value right now is 20 shares at $859.60. And we have lost $51.64, or about a 5% or almost 6% loss. And this takes up about 8% of our portfolio. So really not bad. Our only big loss is in GE, but we'll go ahead and keep on going. So the next company we have is one that I will always believe in, and it will be in my portfolio for the rest of my life. And that, well, not the rest of my life, but until retirement. And that is Apple, which is ticker symbol AAPL. And okay, so what happened here? We bought 1 share of Apple at a huge price of $447.80 on August 11th. Right, and 20 days later, we had a split that allowed anybody who had 1 share of Apple to have that split into 4 equal shares at whatever price it was. I think the price was like $550, so it costs about $125 or 100 and something dollars a share. And then after that, on post split day, we went ahead and bought 6 more shares at a price of $127.68. So our market value is $1,180 with 10 shares, and we have lost $33.88, which has put us at almost negative 3% for this position. And the position makes up about 11% of my portfolio, and we are actually pretty happy with this. Going forward, we hope that Apple will be about 10% of our total portfolio in this particular portfolio. So we are exceptionally happy with this, and we think that by next week we could see a positive sign or a green for Apple. So looking forward to that. Next up, we have a company that I will be talking about in a analysis video, but this is Southwest, ticker symbol LUV, and it's the most bullish airline stock for me. It's the one I believe in the most, and we have 15 shares at a market value of $594.75, and we have lost $22.02 and in the time that we've had it, and it dates back to March. As you can see, we bought 10 shares March 5th, we bought 1 share on May 7th, and we bought 3 shares on July 6th, and then we bought 1 more share on post-split day for Tesla and Apple. And we're just averaging down the cost. As you see, we started with that $45 a share. Now we're down to, $41 a share. So it's down $4 from the original price that we got in at. And so it makes up about 5.5% of my portfolio, and we're really happy with that. Now, obviously, it's not going to be that high of a position going forward because we will prioritize other stocks, but we do want to go ahead and still make this a position in our portfolio. It might make up, when it's all said and done, it might make up 1 or even 1.5% of our huge portfolio that we get out of this, that we have visualized in the near future. Those positive affirmations, they do come true. So Keep on telling them to yourself and keep on doing things that are going to put you in position to make sure that comes true. And so we're going to talk about 3 more companies, and then we're going to go ahead and get out of here for today. The next company we're talking about is Chevron, which is ticker symbol CVX. And as you can see, we bought 1 share at $96.20 on June 3rd of 2020, and we have lost $22 in this company, or about 23% since the time that we've had it. And we're okay with that because we know that it'll rebound and do what it has to do. So moving on, we have this next company we bought at $95.15, and this was one of the very first companies that I ever bought. This is actually what I spent my first $100 on in my Webull account. It took me a whole month and a half to figure out what to buy, and this was the very first stock that I bought in this account. And I bought it on October 22nd of 2019, a month and a half after opening the account. And we went ahead, and in that time we have lost $12.34, or about 13%. Almost makes up 1% of our whole portfolio. But we really like this stock, and it's basically it's a REIT. So it has a compilation of real estate stocks under this exchange traded fund, and it does give a nice dividend. So we'll be holding on to this. We might go ahead and buy a couple more shares before it goes back up to its original price. So tune in for that going forward. Next up is the last company we're going to go ahead and talk about, and that is Allstate. Are you in good hands? With that said, we went ahead and bought 1 share of Allstate at $103.34. We know this is a super solid company. We're not worried about them at all. Like I said, insurance companies are in my top 4 as far as my favorites, and we bought this on June 9th of 2020, and we have an unrealized loss of about $10.48, or about 10% loss so far in this position, and it makes up almost 1% of our portfolio. But like we said before, we are not worried about that at all, and we're going to go ahead and end the screen recording right here. With that said, thank you so much for watching this video. If you haven't already, go ahead and smash that like button. Make sure you subscribe, and if you'd comment down below which one of those stocks was your favorite. If you comment down below what stocks you'd like to see me add to my portfolio. And if you never want to miss out on another video, make sure you go ahead and hit that notification bell. And with that said, thank you so much, and I will see you in the next video. Thank you and God bless.